Good afternoon. Welcome to Midcap Radar, live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Vivek, good afternoon. Some trend reversal for today, at least. So far, Nifty is in the green. It did see higher highs. It has come up from those levels. But nevertheless, midcaps continue to outperform and banking names lending some support.
That's right. Good afternoon to you. And it's a green screen. As you can see, yesterday, only the mid-cap index at this point of time was trading the green. But today, all the indices are up and away. Well, we have a lot lined up on the show, so let's start off with the top headlines. Stocks gain as hope of a mini India-US trade deal revives. Auto and realty are prominent gainers, even as utilities and metals sulk. Mid-caps gain.
Tejas Networks declined 6% after a weak first quarter. Revenue declines nearly 90% sequentially, while the company also records a loss of over 190 crore rupees. The management tells CNBC-TV18 that expectations for FY26 should be moderated due to the strong base set in FY25.
Rallis surges over 8% after delivering a strong margin expansion in the first quarter of the year. The management tells CNBC-TV18 that they expect to benefit from the China Plus One theme going forward.
Tata Tech is in focus after quarter one revenue declines 4.6% sequentially. EBIT margins have missed street estimates. Management, however, tells CNBC-TV18 they are very confident that they will not see a decline in FY26. Okay, those are the top headlines for the markets. As we've been pointing out, it's a green-looking screen today. Nifty is up 106 points. The mid-caps are the one which are outperforming today. A 400-point uptick on the mid-cap index. The advance decline ratio is in favor of advances currently. And we do have a lot of sectoral movers specifically today, be it the chemical space, be it the fertilizer space. Of course, Hormuz will talk about more stocks in just a bit. But, you know, the main theme, of course, is reaction to earnings. We have seen some recovery in terms of Asian markets as well. Also, the CPI print that came in, that is something that is quite refreshing for the markets. So all in all, looking decent for the markets today.
Absolutely. Agrochem space, like you mentioned, just recovering. Well, a couple of stocks on the radar, whole host of insurance companies will come out with their results. And ahead of the results, quite a few of them are actually under pressure. ICICI General, that particular name under pressure, SBI Life, HDFC Life, as well as ICICI Prudential, all of these names under pressure. But these stocks and a whole host of other stocks is what Hormuz has. This is our special segment, Midcap Movers. Hormuz is standing by the wall to take us through the midcaps that are moving around in the session.
A second day of outperformance for the broader markets, both the mid and the small cap indices doing very well for themselves. We start off with some of the gainers then in the mid caps arena, and you can see Sobha there at the highest point of the day, 5.5% higher, as is Anantraj now gaining up to 7%. TBO Tech, Godfrey Phillips has cooled off from the highs, but now is heading towards that 10,000 mark is Godfrey Phillips. The fertilizer stocks, as we just highlighted, they are doing very well today. Fact, of course, has very little free float, but still trading with gains of around 8%. RCF, Deepak Fertilizers, Best Agro Life, all of these names doing fairly well for themselves. Auto is the top sectoral gainer today, and news flow as well. Samvardhana Motherson among the top gainers, 3% higher, as is TVS Motors. Bharat Forge 2 at the highest point of the day. Take a look at some of the volume-led movers then in today's session. And Piramal Enterprises off the highs of the day, but Piramal Pharma continues to remain at the day's high, 3.5% higher. Yet another day of gains for both these companies. And Domes Industries was the one that I wanted to highlight. That too is trading with gains of around about 3.5% on very strong volumes. And lastly, stocks at a 52-week high. Look at Nippon Life. The spike that has been coming in the last few minutes has taken the stock to a 52-week high. What's also at a 52-week high is Nesco. PSP Projects is up 5%, and Mass Financial saw a block deal earlier in the day in the pre-open window and is now trading with gains of around 3.5% at a 52-week high as well. Back to you.
All right. Thank you so much for joining us with all those details, Hormuz. With that, we'll do one thing. We'll move on and get Shrikant Chauhan of Kotak Securities for a technical check on the markets. Shrikant, good afternoon. Well, do you think we'll build on to this recovery or we'll consolidate at these levels?
Good afternoon, Sonal. Good afternoon, Vivek. Well, for Nifty, we are of the view that it is into corrective mode, and it is correcting from the highs of 25,600 to, let's say, around 25,000, or in the worst case scenario, we may even see the levels of 24,800. So I am expecting this correction to continue for at least next few days because overall the strength is still missing. although we saw good amount of buying pressure at 25,000 levels, but there is equal amount of selling pressure at 25,200 and 300. So till the markets are not crossing 25,300 confidently, I am of the view that the market is going to consolidate. And whenever there is a consolidation in the market, we see buying interest in mid cap and small cap companies. So we need to be more and more stock specific instead of focusing more on the indices.
Understood that. Srikanth, you said you need to be more stock specific. So which are the stocks that you are focusing on?
So Vivek, today we saw a good amount of buying interest in real estate stocks, especially mid-size real estate companies. In that, Anantaraj is doing well. We also like Ajmera Realty, which is around some 910, 915 sort of levels. From here, Ajmera can again move back to the levels of 1,000. But in case if we consider its overall long-term pattern, then I'm of the view that the stock is heading for at least 1150. So it will take some time. But if there is a medium to long-term view, then certainly we should look for adding Ajmera Realty even at current levels. The other stock which we like is Suzlon. And this time again, we are expecting some buying interest in renewables or in wind energy sort of stocks. Suzlon is currently trading at 67, 68 sort of levels. But based on its technical formation and weekly formation, I'm going to say on long-term frame, the stock is suggesting us that it is heading for the levels of at least 75 or 78. So it's a decent upside that we are expecting based on its technical formation. But very short term, the stock can even touch the levels of 70. So it's a buy at current levels, and we can keep a stop loss somewhere close to 64 for the same.
Thank you so much, Srikanth, for joining us, giving us your view both on the markets as well as your individual trading picks. Before we slip into a short break, here's an important programming alert. The Governor, RBI, will shortly be speaking to CNBC-TV18's Lata Venkatesh. Expect answers for all the questions that are bothering you. Does 6-year low inflation open up space for more rate cuts? Does low CPI give RBI scope to liquidity surplus for longer? Will tariff wars force down RBI's GDP growth forecast? Tune in post noon for the most definitive RBI governor interview, only on CNBC-TV18.
Welcome back. You're still tuned into Mid-Cap Radar on CNBC TV 18. Let's get a corporate conversation now. Amit Ramani, who is the chairman and MD at Office Space Solutions, is joining us now. The company has partnered with Zinnov for an event which is catering to global captive centers, capability centers, And the market size currently is around $46 billion, which is expected to grow to $85 billion by 2030. What is the opportunity for Office in this case? Let's have that conversation. Amit, good afternoon. Thank you so much for joining in. Well, I know you cater to these GCCs, MNCs as well. You have an offering called Elite by Office. How much does that contribute to your overall offering or your revenues? Is this tie-up going to aid revenues in some sense? Are you looking at more clients in terms of GCCs for your portfolio?
So, Sonal, thank you for having me on the show. I think the partnership that we have evolved with Zinnov is clearly a testament to our focus on making sure that these global capability centers that are being set up are set up in the right fashion. We are a workspace partner with Zinnov on this, and it shows our commitment to creating some of the best workplaces for these companies. Clearly, GCCs have changed. They used to be, back offices primarily, but over the last 3 to 4 years, we have seen that this is going towards setting up the front of the house process, as well as innovative and new kind of initiatives are being set up in India. And hence, what you require is a space that is commensurate with any international standards. And hence, these GCCs are a key part of our focus for the next few years. Elite offering was specifically created for GCCs, which are expecting a much premium workspace, and that's what we deliver for our clients. For us, this business currently is Elite as a business is a young offering for us. We have currently about 4 centers that are live under this umbrella out of the 230 odd centers. But this year we will add another 5 to 6 centers. So ultimately, Elite will end up being about 10% of our overall revenue pool for the business. And currently, we are servicing multiple GCCs that we are addressing. We have Meltwater in Hyderabad. We also have AVC Fitness. We also have Zenov, which is our partner in Hyderabad, again, in one of our gold centers. So I think this is a key, just the beginning. And we feel that today, almost 60% of our business comes from global capability centers and large enterprises. And that'll continue to grow as we go forward.
Amit, so you said that going forward, you expect this particular segment to contribute close to 10% of your revenues. Could you specify the timeline for that? Last time when you joined us, you said that you're looking and you're targeting a revenue of close to 1,500 crore in FY26, indicating a 30% revenue growth. Do you stand by that number? Any upside risk there? And the timeline for this particular segment contributing 10% of your revenue?
Yeah, so we clearly are focused on that same number. We are working towards that 30% growth. Currently, the Elite and Gold, which are both our premium offerings, are already almost touching 10% of our overall revenue. And this probably will grow to somewhere around 15%. And the timeline for that would be somewhere around the next 12 to 18 months.
Okay. Amit, when we talk about Gold Plus Elite segment, how does it differ from the standard segment in terms of margins, and second, in terms of rental escalation? How often are you able to do it, and how higher are the margins in this segment?
So, the margins are almost similar, right? Because even in our flagship product, the key ingredient for any pricing is the rental, right? Because that is the one big differentiator, typically 35 to 40% of the overall revenue. So if we are going into a Gold or an Elite center, the base rental is higher. So the margins are almost similar. Margins do not change. In terms of escalations, all of them command similar escalations, about 5% on a year-on-year basis. And that's consistent across the various offerings that we have.
Okay, so Elite and Gold are different in terms of the clientele, not really pricing. Just wanted to confirm that.
Pricing is different. So the flagship product, Gold is about 20% higher and Elite is another 20% from Gold. So the pricing differs between the 3 models. It's about the kind of infrastructure that we provide and the kind of services that we provide, which kind of differentiates the 3 service offerings.
Exactly why I wanted to ask, if service is different, is it not costing higher to the company as well? That's exactly why I wanted to ask you if there is any margin difference generally.
Primarily, no, I would say, because I think in general, our service offerings are very, very good. Experience that we offer in our flagship product and Gold and Elite are almost similar and consistent. It's just that in Elite, we have different kind of offerings like training rooms. There is a clubhouse. There is, those kinds of services. So the margin improvement might be there a little bit, but it's pretty much consistent from our standpoint.
Understood that. Amit, I wanted to ask you one more thing. Last year, you pivoted away from the traditional straight lease model to the managed aggregation model. Yeah. However, there are concerns that this particular model that you're following will have lower margins compared to the earlier model. So going forward, blended margins, what can we expect?
So currently, if you look at our portfolio, 67% of the portfolio is managed aggregation and about 33% is straight lease. That will continue to be the mix that we have. Now, as far as the managed aggregation goes, obviously the contribution margin is lower because our landlord partner is taking a higher risk, right? And plus he's putting new capital towards the fit out. But if you look at my return on capital employed, last year it was 62%. Right. So I think it's always a mix between, contribution margin and return on capital employed. And given a choice, we would love to have much higher return on capital employed.
Okay. Last question before we let you go, Amit. I wanted to understand the mobility vertical as well. We are now talking about not the core business so much, but the other business which would be contributing more going forward. What is the plan to scale that up? How much is it contributing now? Will you be making more investments here? Give us some numbers.
Yeah, so clearly, if you look at our current business, about 75% revenue came from co-working, of which about 11% was from allied services. Another 25% came from design and build. The intent this year is to grow all of these allied services. So we have now a vertical called Office Cafe, which basically will do food and beverage for third-party, clients as well. We are also building backward integration, doing our own furniture manufacturing, which will help improve some margins. We are also tied up with Ecos Mobility for providing transportation solutions. And then finally, the design and build vertical, we have invested this year to grow that vertical as well. So I think all of these will start contributing more, but the core, obviously, business of co-working, because of the markets doing well, because of the expansion happening with GCCs and large corporates, that will also continue to grow in similar proportion. So I think the allied services, our intent would be to grow that from the current 11% to roughly about 15% over the next 12 months.
Thank you so much, Amit, for joining us. We wish you all the best as you head into FY26. But before we slip into that short break, just have a look at the flashes on your screen. ICICI Prudential Life has just come out with its Q1 numbers. Now, the most important number that we watch out for is the VNB margin, or the margin of the value of the new business. Now, that particular margin has come in almost 100 basis points higher than what the CNBC-TV18 poll was anticipating. The VNB margins had come in at close to 24.5%, versus the poll of close to 23.6%. So that's one positive takeaway. More details will emerge once the company does upload the investor presentation. In fact, a lot of the parameters were known given the fact that the company does upload monthly data. But the key point is the VNB margin has come in above what the poll was anticipating and also above what the street was anticipating. And the stock is clearly reacting to that particular positive surprise. Now, we also have Yash, who's crunched the numbers. And once, if Yash is ready, we could go to him. Before that, the other important development. Yeah, Yash is standing by. Yash, how do the numbers look? VNB margin is a surprise.
The expectation, first of all, from the street was, for subdued numbers. But the numbers which have turned out are very, very strong. I'll just take you through those numbers and, just compare those numbers what have come out to what the street was expecting. The total annualized premium equivalent, that has come much ahead of CNBC-TV18 poll. That is 1864. Value of new business, another parameter, that has come at about 457 crore rupees. The poll was 440 crore rupees. So VNB is also ahead of what the street was anticipating. Finally, the most important number in terms of the margin performance that has come through. The margin, VNB margin, has come at 24.5%. The poll was 23.57%. So almost 100 basis points beat has come as far as VNB margins for the first quarter are concerned. Probably this is largely going to be a favorable product mix which has helped ICICI Prudential to achieve better margins, better than what the street was anticipating. These are strong set of margins, 24.5%. VNB also coming ahead of what the street anticipated. So overall, in terms of all three parameters, the numbers look very strong for ICICI Prudential. And the stock hasn't moved much in the last 3 months, in the last 6 months as compared to other life insurance companies. So that's another advantage, coupling with the strong numbers which the companies put out.
Okay, all right. Thank you so much, Yash, for making sense of those numbers. The stock spiked slightly off those highs, but VNB margin, that is something that the street seems to like. We'll do one thing. We'll slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back to Mid-Cap Radar. Well, the mid-cap side of the market continues to remain quite strong. One particular stock or one particular company from the tractor space that just declared its numbers was Swaraj Engines. Sudarshan joins in with the intricate details of that particular numbers.
So in a seasonally weak quarter, Swaraj Engines, which is primarily engaged in the sale of diesel engines and diesel engine components and spare parts, has reported steady set of earnings. And on the back of that, you can see a big move in the stock, currently up almost 11%. It has reported highest revenue that it has ever reported in a quarter. Also on the profit front, it's the highest number that company has seen in Q1 of FY26. Both profit and revenue are up 16% each. Even EBITDA has increased by 12%, while on the margin front it was steady, but it has seen a slight dip of 50 basis points. It has come in at 13.6% versus 14.1% same quarter last year. Gross margin too was steady, and it has held on to levels above 21%. So overall, it's a steady set of earnings, and that's the reason it's a big move that stock is seeing.
That's right, Sudarshan. Quite a strong up move that you're seeing as far as Swaraj Engine is concerned. Almost 11% higher on decent volumes. Well, just immediately post the numbers of ICICI Prudential Life. Just have a look at some of the life insurance names. Have a look at ICICI Prudential itself, once again scaling near the day's highest point. Bajaj Finserv, that particular stock too, has spiked up to the day's highest point. And it'll be interesting to see how HDFC Life has also reacted post those particular numbers, and LIC too is in a similar space. But the VNB margin positive surprise is something that the street will take and street will really like. But with that, it's all the time we have on this edition of Midcap Radar. Our mega exclusive interview with the RBI Governor comes up next.